The housing market is in a state of unprecedented instability. Sellers are slashing prices, yet many homes still sell above the list price. Rents are soaring, but so is inventory. These contradictions point to systemic issues in the real estate sector. This video examines Zillow's latest reports to make sense of these conflicting trends. We'll break down what's happening in different market segments and how it impacts homeowners, buyers, and renters. We'll also explore potential solutions to address the root causes of this market turmoil. By the end, you'll have a clearer picture of where the housing market is headed in 2025 and how to navigate these uncertain times. In the constantly evolving housing market, Zillow's new findings highlight noteworthy developments shaping the industry. Let's explore the data and discover what it reveals about home sales in 2025. A record-breaking 23% of listings had price cuts in January, the highest for any January since 2018. This surge in price reductions comes despite ongoing inventory shortages, primarily due to relatively high mortgage rates hitting 7.04% in January. These rates are squeezing buyers, resulting in a 3.6% drop in newly pended sales compared to last year. The impact of these high rates varies significantly across different metro areas. Denver, Las Vegas, San Diego, and Austin are seeing the biggest jumps in listings with price cuts. Phoenix leads with price cuts on 33.5% of listings, followed closely by Tampa and Jacksonville at 32.4% and 30.8% respectively. These regional variations highlight how local market conditions can differ dramatically. Despite the widespread price cuts, 25% of homes are still selling above list price, creating a paradox in the market. This complexity stems from the interplay between higher mortgage rates and life events driving sales. A whopping 78% of recent sellers cited life events as their main reason for selling, not market conditions. People are still moving for jobs, growing families, or downsizing regardless of interest rates. These trends are shifting the market dynamics. According to Zillow, buyers now have more negotiating power than in any February over the past 5 years. However, we're also seeing more sellers enter the market, with new listings from existing homeowners up 11.5% compared to last year. The affordability crisis is at the heart of these market shifts. The typical U.S. home is now valued at $356,776, but monthly payments have skyrocketed by 115.4% since before the pandemic. That's more than double what buyers paid just a few years ago. Buyers struggle with affordability, while sellers adapt their pricing strategies to attract attention in this challenging environment. Some are motivated by life changes, while others respond to market pressures. This mix of factors creates a complex landscape where regional differences significantly determine local market conditions. As we continue to navigate this evolving real estate market, it's clear that both buyers and sellers will need to stay informed and adaptable. The interplay between high mortgage rates, regional variations, and individual motivations is reshaping the market in ways we haven't seen before. Understanding these dynamics will be crucial for anyone looking to buy or sell a home in the coming months. If you've been following me for a while, you know, my experience has taught me that informed consumers save money and are happier during their move. That's why I deliver market reports from numerous sources, analyzing the U.S. housing market from all angles. Today's report from Zillow is its unique view of the housing market. If you're not a subscriber, please smash that thumbs up like button and then subscribe now to get all my new content when it is fresh. If you really want to know what's going on in housing, to see and hear the data explained, to learn the tips and tricks that put extra money in your pocket, then subscribe now and I'll keep you in the know. Just when we thought we understood the housing market's trajectory, the rental sector throws us a curveball. Zillow's latest report uncovers a puzzling disconnect between two types of rentals, forcing us to rethink everything we thought we knew about supply and demand. The rental market is showing surprising resilience, but there's more to this story than meets the eye. Let's break it down. Overall rent growth is continuing, but there's a significant divergence between single-family and multifamily rentals. Single-family rent growth remains strong, while multifamily rent growth is moderating. This ties directly back to those sky-high mortgage rates we've been seeing. They're keeping potential buyers out of the sales market and driving up demand for single-family rentals. People who might have been ready to buy a home are now finding themselves priced out, thanks to that combination of elevated home prices and higher mortgage rates. So they're turning to single-family rentals as an alternative. This increased demand isn't being met with an equal increase in supply. The construction of single-family homes hasn't kept pace, which is pushing rents up even further. Single-family rents have increased by 41% since the beginning of the pandemic. To put that in perspective, a home that rented for $1,500 a month in early 2020 might now cost $2,115 per month. The multifamily sector tells a different story. There's been a surge in apartment construction, which is helping to moderate rent growth for these units. The typical asking rent for multifamily homes now stands at $1,820, reflecting a modest 0.2% increase from the previous month. Location plays a crucial role in rent trends, with significant regional variations. Hartford is leading with the highest annual rent increase at 7.8%, while Denver saw a decline of 0.4%. These regional differences directly impact renters across the country, contributing to growing affordability challenges. The median household now spends 29.1% of its income on rent, up from 26.8% before the pandemic. That's a significant increase in the portion of income being allocated to housing costs. The income needed to comfortably afford rent has shot up to $78,722, a 3.5% increase year over year, and a 33.9% jump since pre-pandemic levels. The disparity between single-family and multifamily rents is now at its greatest since Zillow began tracking this data back in 2018. This highlights the unique pressures we're seeing in different segments of the rental market. For landlords, particularly those with single-family properties, this could mean strong returns. For renters, especially those looking for more space, it means facing increasingly challenging affordability hurdles. These trends are reshaping the rental landscape, forcing both renters and landlords to adapt to new market realities. As we continue to navigate this complex housing environment, it's clear that the interplay between the sales and rental markets will remain a critical factor in shaping future trends. The housing market landscape is rapidly changing, with Zillow's latest data revealing a significant improvement in inventory levels. This shift could transform the house hunting experience for millions of Americans. Housing inventory is now approaching pre-pandemic levels, with the number of homes on the market nationwide in December 2024 just under 1 million, the highest we've seen in December since 2019. This signals a major change in market dynamics, but what does it mean for buyers and sellers? We're seeing a different picture emerge from the severe inventory shortages and bidding wars of recent years. The available pool of existing homes is now only 26% below the 2018-2019 averages for this time of year, a substantial improvement from the 51% shortfall in February 2022. This increase in inventory is giving buyers more options and breathing room. With more homes to choose from, buyers are facing less competition than in recent years. This shift is likely to lead to softer price growth in the coming months, potentially creating opportunities for buyers who've been waiting on the sidelines. Interestingly, the inventory growth isn't uniform across the country. 10 of the 50 largest major metros now have more homes on the market than they did at this time of year before the pandemic. We're seeing particularly strong inventory growth in Florida, Texas, and other parts of the South. This regional variation is partly due to builders in these areas keeping pace with demand. States like Texas have ramped up new construction, significantly contributing to inventory growth. This highlights how local policies and construction practices impact housing availability and affordability. For sellers, the changing market means increased competition. The median age of inventory in January 2025 was 79 days, indicating homes are staying on the market longer than previous years. Sellers now need to be more strategic about pricing and marketing their homes to stand out in this less frenzied market. While inventory is climbing, it's important to note we're not back to pre-pandemic levels across the board. Currently, inventory levels are still 26% lower than before the pandemic and just above 1/2 of the 25-year average number of homes for sale. This underscores that while the situation is improving for buyers, we haven't fully returned to historical norms. Zillow's Market Heat Index now shows a neutral market for the first time since 2019, a significant shift from the extreme seller's market of recent years. This move towards a more balanced market could have implications for affordability, potentially increasing buyer power. Considering these changes, it's worth exploring how policy adjustments might further support this trend towards improved housing accessibility and affordability. The housing market's complexities demand strategic changes in construction and rental policies. Experts advocate for increased single-family home construction and addressing rental cost disparities to improve affordability. While challenges persist, opportunities exist for savvy buyers and sellers who understand market dynamics. Renters should stay informed about local trends as conditions vary significantly by region. The housing crisis calls for urgent policy reform and further market analysis. To gain a more comprehensive understanding, check out my latest video on Redfin's market analysis. It's right there on the side of your screen. In this ever-changing market, knowledge is crucial for making informed decisions. But what policy failures have led us here? The answer might surprise you in our next analysis.